Thanks for clicking. The Toronto Regional Real Estate Board just released its real estate data for the month of September, showing mixed results as sales continued to plummet but prices remained relatively stable. The data comes at a time when we've heard throughout September that Toronto's real estate market was mixed, with continually high prices combined with dwindling demand. While some articles noted the return of bidding wars, others welcomed the return of the home buyer's market. Indeed, today's data showed that both buyers and sellers may be wary of getting into the market, with sellers reluctant to accept lower prices and buyers waiting for prices to drop further.
Ready when you are, boss.
So what I want to do today is go over September's price data, take a look at some of the stories we heard from Toronto throughout the month, and then take a look at what to look for next. As we'll see, Toronto's market is in somewhat of an impasse with falling supply and weakening demand. Whether or not this trend will be reflected Canada-wide remains to be seen, but we will have an update out on that data on this channel when it's released in a little over a week and a half. Click like and subscribe to get those updates, but for now, let's get into Toronto's data. First off, the benchmark price. The benchmark price is the price of a home which represents the most popular set of features. The benchmark price in Toronto was down to $1,110,700 in September, down about $14,000 from the August benchmark price of $1,124,600. Not a huge drop, especially in Toronto, but a drop nonetheless. However, the average price of a home was up in September, rising to $1,086,000 and change, up a little over $7,000 from August's average price of $1,079,500. So a $7,000 increase in the month of September, not a big increase, barely noticeable increase, and a sign of a stabilizing market thus far. And the median price of a home in Toronto was also up in September. The median price, that is where half as many homes sell for over that price and half as many sell under that price. The median price of a home in Toronto in September was up to $945,000, which was up from August's $930,000. A $15,000 increase in the median price. Again, just like the average price, not a big increase, especially in Toronto, especially relative to their overall price structure, but an increase nonetheless, and a further sign of a stabilizing market. And the sales to list price ratio remained relatively stable as well. The sales to list price ratio measures by how much a home sells under or over asking price. So if the home is listed for $100,000 and sells for $90,000, then the SLPR, the sales to list price ratio, is 90. The SLPR in Toronto in September was 98%, and it was also 98% in August. So homes are still selling on average marginally under asking, but we don't see much of a change. We did see a small change in the months of inventory in Toronto. Months of inventory, that's where if no more homes came to market, how long would it take for Toronto to sell out of all of their homes with what is currently listed. Right now, Toronto has 1.4 months of inventory as of September, which was up from the 1.3 months of inventory that we saw in August. In the stabilization of prices, it all makes sense when you look at new listings. New listings in Toronto were down by 16.7% from the same point in time last year, indicating a reluctance on the part of sellers to get into the market to put their homes up for sale.
Not at those prices.
So, in summary, the benchmark price was down from the month earlier. The average and the median price were up from the previous month. The sales to list price ratio remains the same. Homes are still selling under asking, but by the same amount. And the months of inventory is up by 0.1 months. So we do have a little bit more inventory than we had in the previous month. And this relative stabilization of prices, for now, explains a lot of the mixed stories we heard from the Toronto market throughout September. As mentioned, we did see some stories of the return of bidding wars, with homes selling between $250,000 and $400,000 over asking price. However, the return of bidding wars in September was largely explained by buyers trying to get into the market before their pre-approvals expire, before they have to use the mortgage rates that are available now, not the mortgage rates that were available 2, 3, 4 months ago, before the Bank of Canada raised interest rates and reduced buying power. Indeed, Robert Kavchik, a senior economist with the Bank of Montreal, noted in an interview last week that the current real estate market is being propped up by pre-approvals that were issued 2 and 3 months ago.
Much as prices have come down and activity looks pretty soft through the summer,
The market now is still kind of leaning on pre-approvals from a couple months ago before the Bank of Canada raised rates 175 beeps.
And it doesn't look like this will be the case for very much longer. The stories of bidding wars in September were far, far overshadowed by stories of a real estate market that has shifted in the buyer's favor. The Toronto Star featured a story of a home buyer who had an accepted offer with conditions over $125,000 under asking price. In another case, a Mississauga home went for $54,000 under its current asking price after undergoing 4 price reductions over the past few months. The house was initially listed for $2.1 million in July and sold for $1.6 million, a $500,000 difference in just a few months.
I am never going to financially recover from this.
Realtor James Fredima noted in an article that the market has shifted from one heavily favored by the sellers to one heavily favored by the buyers. That has been completely flipped on its head, where now buyers are getting their day in the sun and sellers are having to work a lot harder to sell a property. So, in summary, while we have seen some stabilization in prices in Toronto's real estate market, all signs are pointing to the idea that this is not likely to continue.
Oh, shut up. Seriously, shut up.
As old pre-approvals expire, homebuyers are not going to have the buying power that they've had over the past few months, and this is going to put even more downward pressure on demand than there has been already. And while sellers may be reluctant to sell at current prices, they will have a difficult time finding buyers that are A, qualified to purchase at prices from a few months ago, or B, willing to purchase at those prices. If you're a buyer and you know that prices are going down for the foreseeable future, the only thing stopping you from waiting this out, waiting until prices drop even further, is the worry that the Bank of Canada will be raising interest rates for the foreseeable future as well, which is definitely not out of the realm of possibility. We will be having an update out on the Bank of Canada's interest rate announcement on October 26th. If you want to get those updates, make sure you click like and subscribe. But for now, thanks so much for watching.